It's Thursday, the 2nd of November 2023. Welcome to the Fast 5 by Fear and Greed Business News, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Adam Lang, and good morning, Sean Aylmer.
Good morning, Adam.
Sean, story number 1. Home prices rose again last month, putting them on track to be up close to 10% this year, with immigration pushing up demand.
The raw numbers across the capital cities remain impressive. Overall, the national average was up 0.9% last month, led by Perth, Brisbane and Adelaide. The annual change is about 5.6%. That figure is led by Sydney. If you look at how much house prices have risen since their most recent lows, Sydney's up 11.6%, Perth's at 11%, Brisbane 10.5%, Adelaide comes in just under 8%. Melbourne hasn't done so well, 4.5%, Canberra's at 1.3%, and after October, Hobart is at least on the positive side of the ledger, up 0.8% from its recent low. The shortfall in supply is still dominating the market, in part due to the surge of immigration. Net immigration last financial year was around 500,000, about double forecasts. Also, the construction market has slowed and sky-high rents have pushed some people into buying homes. AMP's Shane Oliver estimates there'll be an undersupply of about 190,000 homes by the middle of next year, which will keep pressure on prices.
Sean, this is relevant to renters and homeowners alike. Are price rises expected to continue?
Few economists reckon prices will keep their current 10% pace. AMP's Oliver reckons that eventually interest rates will get the upper hand, and he's forecasting a 5% increase next year. Remember, we've had the fastest rises in interest rates ever, and there could, of course, be another one next week. Oliver also points out that Australian housing remains expensive on all metrics. Home price to income ratios are just below record highs, above peers overseas. The time taken to save for a 20% deposit has more than doubled over the past 4 decades to 10 years. More stock will eventually come online. The bottom line to all this, the pace of house price growth is likely to slow, and there's a possibility, which is more than slight, that interest rates could soon really start to bite.
Story number 2, Sean. When it comes to big money, it's handy to be the big Australian. BHP will spend about $7.5 billion to build stage 2 of its Jansen potash project in Canada.
It takes to about $24 billion what the company has now spent on the project, and the investment will create one of the world's largest potash mines. Potash is one of BHP's long-term pillars. Its primary use is as a fertiliser in agriculture, think corn, soy, rice and wheat. Potash doesn't move in sync with some of BHP's other products like iron ore, copper and nickel. That's what BHP likes. Chief Executive Mike Henry hopes it will allow the company to take advantage of global megatrends of population growth, urbanisation, rising living standards and decarbonisation. Now, the war in Ukraine has disrupted the global fertiliser supply chain. 40% of potash comes from either Russia or Belarus. That's something that BHP wants to take advantage of. First output from Jansen Stage 1 is expected in late 2026.
Sean, story number 3. The International Monetary Fund has called on the Reserve Bank to lift interest rates in an effort to reduce inflation faster.
The IMF also said governments should slow down their booming infrastructure spending so home borrowers wouldn't have to contend with even higher rates. The fund forecasts a delay in local inflation returning to the 2 to 3% target range until 2026. That's a bit more pessimistic than the Reserve Bank. The IMF welcomed the Albanese government banking most of its revenue windfalls from higher commodity prices and income, but said federal and state governments should ease back on their infrastructure rollout to better share the inflation-fighting burden. Deferring some projects could help contain cost pressures and help governments achieve better value for money. That's according to the IMF.
Story number 4. Car maker Toyota has reported record quarterly earnings thanks to a weaker yen, a jump in global demand and improving supply chains.
The Toyota Group sold 5.6 million vehicles between April and September. That means it should hit about 11.4 million vehicles this fiscal year. That would pretty much keep it as the world's number 1 car maker. Now, demand for its hybrid and internal combustion vehicles persists, even as EV makers like BYD and Tesla take the lead in that area. Toyota has stepped up efforts on EVs, saying it's investing another $8 billion in a plant in North Carolina that will make batteries for fully electric and plug-in hybrid models. Notwithstanding that, Toyota is certainly back and the world's biggest car maker.
Sean, story number 5, and I think this might be one of the most interesting business stories of the last decade. WeWork is set to file for bankruptcy as early as next week, according to a report in the Wall Street Journal.
The company had one of the most dramatic trajectories of the last startup boom, reaching a valuation of $47 billion before a disastrous attempt at an initial public offering, and of course challenges to its co-working model during the pandemic. In a filing, the company said it's been holding discussions with creditors about improving its balance sheet and taking steps to rationalise its real estate footprint. Earlier in the week, the company entered into a forbearance agreement with its creditors that ends in 7 days' time. It doesn't look like it's going to avoid bankruptcy after that.
That's it. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Adam.
It's Thursday, the 2nd of November, 2023. Remember to hit follow on the podcast, and if 5 minutes isn't enough, then find our longer podcast called Fear and Greed on your favourite podcast platform. I'm Adam Lang, and that was the Fast 5 by Fear and Greed Business News. We hope you have a great day.